The market is crashing. What do you do when you see your stocks plummeting? It seems as though every person is an investment expert. Where do you turn for the right advice to find the right person for you? All that on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them right here in Seattle, Elevated Financial Management. Check us out online, efmnw.com, all letters, efmnw.com. Great resource website for you. Links to the TV show, radio shows, and podcast form. Great information there. And between Mark and Casey, 42 years combined experience. It's all about retirement, getting you ready. They're certified financial fiduciaries. I'm Morgan Patrick. My pleasure to go back and forth with the gentleman each and every week, always about what's the latest on retirement. Guys, we're going to start with this. Everybody's getting expert advice from all different areas. How do you find out what's right for you?
That's really the big question, right? Is, how do you find the right information for you? And I think that, the reason that this caught us is because we see a lot of folks, and it's a little different, I guess, maybe from our perspective than it is from the retail investor, we could say. But, we do see a lot of folks that get up on radio or TV or teaching a class or something along those lines, and they make these statements, and they're really well-spoken folks and very charismatic and all this. And they make these statements as though they're fact, right? They make these statements about the future as to what's going to happen in the market and what the tariffs will do. And they make these statements as though they're fact. And it really it gives us pause, that's for sure. And I think it gives a lot of everybody else pause too, because the reality is we just don't know. That's the key. And so, we're always very cautious. As a matter of fact, there's a quote that I think is really valuable. It says, "Beware of money gurus who talk about the future as if they have a crystal ball." I could not agree with that idea more. And you know what? Mark and I will be some of the first ones to tell you, we don't know what's going to happen. We absolutely hope that the market's going to take off, but we don't know if it's going to stagnate, if it's going to continue to fall, if it's going to turn around and skyrocket. We don't know. And that's why we're always coming back to the idea of having a plan that allows you to be successful either way.
Guys, now more than ever, with everything that we've seen just in recent weeks, it has been an absolute roller coaster. We've talked about the implementation of tariffs, and now we're talking about the retaliatory tariff and what that's going to mean. People are trying to make sense of it. And to your point, Casey and Mark, I'm sure you're on the same boat. People are trying to get information. They're tuning in to the CNBCs, all these different outlets. Right. And at the top of the hour, they're getting this. At the bottom of the hour, they're getting this. Again, you got to understand these networks are selling advertising. They're having people on to talk about whatever they're selling. It's going to influence how the broadcast goes. So how important is it to find a fiduciary firm that you trust, that you have confidence in, that you can lean into?
See, the first thing I just want to say is everybody needs to maybe step back just a little bit and take a really deep breath, right? Because you're right. Everybody, if they watch Mad Money or watch any of the financial shows right now, the boards are screaming red. I think we all know that. But again, I just love one of the sentences in this article. It says, but anyone can call themselves a financial planner, right? And that's why we believe so much in a total written plan, so that when the market is doing this, causing so much stress and anxiety, you're right. There's a lot of money that's being flushed right now. I think we all know that. So do you have a plan where you can weather that type of volatility? That's the point. See, is your income going to be tied to the market going up or down? See, we don't want it to be that way, right? Because if you're riding the train down right now and you're taking money out, at the same time, we've all talked about this in many of our episodes, right, is that sequence of return risk can be decimating to your retirement. And so we just want everybody to slow down a little bit. Just work with somebody. Morgan mentioned it. Casey talks about it all the time. I do. You got to work with someone that's a true retirement planner, because a wealth accumulation advisor is not the same thing. And people want to lump those together sometimes. And I think if you do that, that can be a big mistake, because right now, we're having to walk a lot of our clients off the ledge right now because everybody's stressing out. They don't know what to do for sure. But those that have a solid plan, they're not. We're getting a lot of thank yous right now, right? That's the beautiful thing. A lot of our clients are not panicking because all of their income is not tied to what's happening in the market.
Yeah, I just did a review with a client the other day, and I asked her, I said, hey, market's kind of crazy. What do you think? It's good for us to hear what clients think, right? Not for us just to tell them what we think. So there's always a back and forth. And she said, it is crazy, but I feel comfortable because I've got a plan. And it's part of the plan that the market will be crazy at times.
The market will be the market.
Yeah, right. But the success, and these are her words. She said the success of my retirement is not founded on the market. And so, or not solely on the market anyways, right? So that being said, to me, I was very excited and happy for her. And also, very appreciative, right? Because that, in reality, that was a compliment to us, right? And the work that we've done. And, the reason I say that is simply because it's not with the intent to toot our horn, but what it really is it's about making sure that whoever you're working with, and it may not be us, right? That we're not saying call us and work with us because we've got all the answers. That's not what we're getting at. But what we are saying is whoever you're working with, if they don't help you be confident in what's going on, if they don't help you be confident as to how your retirement looks and how it's going to work despite what happens in the market, then it might be time to consider somebody different, right? And that may not be us, right? It may be somebody totally different. But the idea is just that really that's founded on solid ground, is that you're looking for whoever it is that can help you be successful, and not just say, oh, well, it's just a paper loss. We just won't sell right now. And that's not sage advice, and it's not comforting, right? And the problem is that really everybody's just gotten used to this idea, right? That you're going to be told, well, it's going to be all right. Everything's fine. We just stay the course. And, that is okay if you have a plan. But if you just have a bucket of investments, that is not good advice.
What I will say to that too, Case, is I got an appointment this weekend, and it was exactly that. They said in the notes that they needed a second opinion because they are not happy with their current financial planner for exactly what we're talking about. That person is not helping this individual to feel better about the situation. They're giving him advice that doesn't help at all. And that's the whole thing. If you're sitting out there, you're wondering, oh no, and you're not getting the help that you deserve and that you should be getting, then it might be time to talk to somebody that might be able to show you something you've never seen before, and it could be pretty exciting to know that you can have a retirement that works even in this type of volatility.
Right. Yeah, definitely. And, I think the other thing is that one of the big cautions that I'll offer here too is, if you spend any time on social media, it sure seems like everybody on social media knows everything there is to know about the stock market, about insurance, about Social Security, about Medicare. I mean, I have never ran across so many people that know everything, right? And they really do, right? And so that's really the point here. And that's one of the biggest things that we're trying to make, is that with social media where it's at, everybody now has a platform, and
everybody's an expert. Everybody knows everything. Yeah.
Exactly. And it's easy to get on this platform and to make these bold statements about X, Y, and Z, and to be charismatic and to have all these ideas. But what is that backed up with, right? And so you want to listen to advice that's based on data, not just speculation and not just emotion. It's not that speculation can't be valuable, right, if it's coming from a reliable source. And it's not that the emotion behind it can't be valuable if it's coming from somebody who is level-headed and understands what's happening. Passion is good, but pure emotion when it comes to investing is not, right? And so you want to work with somebody who's passionate, somebody who cares about you, somebody who cares about what their job is and what they do and how they can help their clients. That's an important piece, but you don't want to confuse emotion or overly emotional with passion. They're different things.
Yeah.
Well, and you've got a large group out there that's just sitting on a portfolio, and outside of the COVID blip that we saw with the market, we've been on a run for 13, 14 years.
Yep.
And now all of a sudden, okay, now we're in a significant dip. How do you react to that? And if you're working your own portfolio, if you're just sitting on that and you're not planning and you're not working with a fiduciary, yeah, I can understand the stress. But having a plan, having a roadmap, understanding that there are going to be ups and downs, and you've planned for it, that's the key, That's that peace of mind we talk about. Now, the opportunity to talk about your own situation is right now. So let's go ahead and get this done. Mark, you want to do the first one. We've got appointments in the office. We've got appointments. You can do it on the phone. These are complimentary just to kind of see where you are. Again, tell us how these appointments are going to go.
Yeah, so please, if you're maybe listening today and you're a little worried about what's happening in the market and you just don't know what to do, please pick up the phone, give us a call. What we want to do is we're going to look at your tax situation a little bit. We believe that's super important right now, too. We're also going to look at where your income is coming from. Is it guaranteed or not? We just want to maybe have a conversation. Like Morgan just mentioned, please, you're going to leave your checkbook at home. Maybe you're getting ready to retire or have retired from Boeing, and you just don't know what to do. Please pick up the phone. Let's have a conversation and let us see if we can't help you here at Elevated Financial Management.
All right, the phone number to call, 866-668-3625. You're going to walk out with a written financial plan. This is 866-668-3625. Again, you're leaving the checkbook at home. This is an opportunity for you to test drive Elevated Financial Management. You're not agreeing to become a client. They're not going to try to sell you anything, and they're not agreeing to take you as a client. This is a test drive. Call now, 866-668-3625. When we return on Elevate Your Wealth, S&P, yeah, we've been talking about it. It went down. And now retirees, they are concerned. That's the discussion when we come back. Welcome back into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. 42 combined years of experience between these two. And again, they're certified financial fiduciaries, and you can find them right here in Seattle. Elevated Financial Management. That's Elevated Financial Management. Website is a resource for you. EFMNW.com. All letters. EFMNW.com. Links to the TV show. Our radio shows are in podcast form. Great information there. And again, check it out, EFMNW.com. Again, I'm Morgan Patrick. We're hitting some of the latest, greatest articles, and we've got a lot to talk about. This one that's in front of us now, guys, S&P 500 crashes. One new retiree finds advisors head in the sand, clueless. What jumped out, obviously, and maybe it's because people aren't as in touch with what's going on as they should be.
Yeah, I think that's it, right? People aren't quite as in touch. And again, right, this kind of goes back to what we were talking about just a few minutes ago, in that there's always this idea that a lot of advisors like to push that it's just a paper loss. It's okay. You know, this is how it works. And you know what? That's all fine to say when it's not your money and it's not your retirement. Exactly. But when it's your retirement, it doesn't feel okay, right? It doesn't feel all right. Now, what can help with that is if you do have a true plan and all of your assets are not in the market. Maybe they're in other investments and you're not solely depending on the market. But for those folks that are mostly invested in their 401k and 100% of their investable assets are in the market, gosh, it doesn't feel okay. And a deep breath really doesn't change a whole lot, right? Now, if you, like I said, if you have a plan, right, and you have other investments, you have other things like that, still a deep breath in that circumstance can be valuable, right? So I think it's depending on the individual circumstance. But, you know, I really appreciated this. It says that one new retiree finds advisors head in the sand, clueless. I am in full agreement with that. There's a number of folks that I have talked to that are advisors, and it's interesting. It seems like their head in the sand, and it really is just not understanding where the client is coming from, right? It's not that they're not smart about the market or investments, not that they're not intelligent folks, but the emotional intelligence to understand where the person on the other side of this is coming from, especially those that are on the cusp of retirement or early in retirement. What's happening right now is unnerving, and there's no other way to say it.
Well, I was going to say that almost sounds like if you're in that category, you're in the cookie cutter category.
Yeah,
like,
there you go.
Advisors are just slapping people into particular plans without really a lot of diving into their individual or couple's circumstance when it comes to retirement, because we're all different.
Yes. Yeah. See, and that's really important. There was a point like you just made. they're using specific models, and then not all of them work all the time for different situations. But I love the fact that, so a lot of individuals may have questions right now. Do I sell? Take maybe the capital gains hit. Well, but then they worry that their Medicare, their IRMA, right, tax is going to increase. But sometimes that could be a very good thing, especially if capital gains raises. So that's why we believe so much in understanding the tax ramifications of what we're doing. And a lot of planning firms, they don't even address taxes. They tell you to go talk to your CPA or your tax preparer. Well, how does that help sometimes if there's nobody to quarterback your plan for your individual situation? We can't overemphasize why taxes are such a big part of what we talk about with every client that comes into our office. And to just pass that off to somebody else, we believe that's a mistake. We need to be involved intimately with our clients and their tax situation, because that sometimes can force or direct us to go a certain way sometimes, right? But if you don't know what that way is and what way the wind's blowing, how are you supposed to help that client?
Yeah, that's it, right? It is. It's an intimate relationship. It absolutely is. And it has to be, and it should be, right? Yeah. Here's a quote from the article that I thought was really good. It's kind of a long one, but just stick with me while I read this. It says, I know the headlines are scary. We get that, right? That's easy to see. I don't know if you'll find my advice soothing, but I'm going to start with a reality check. If you're a new retiree and have at least a 50-50 portfolio, or maybe even more conservative than that, then your bottom line is not the big red number flashing next to the S&P 500 or Dow Jones tickers on your screen. That's a really good point, because most people are not invested with 100% the risk of the overall market. Now, of course, nobody wants to lose anything, right? And I don't want anybody to have to lose anything either, but that is part of the deal when you're invested in an investment that has the ability for loss, right? Or has the potential for loss. And so the idea is that, yes, let's say the market was down 5% today, okay? Well, that doesn't necessarily mean that you're down 5%, right? That very well is not the circumstance. Now, if you are down 5% and the market was down 5%, you're probably taking more risk than you knew, and probably more than you're comfortable with, right? If that's not going well for you. So that's where a plan comes in, and it's really about your individual circumstance. And also think too, yes, the market is having a pullback. It's been struggling. We understand this. But the market has also been on fire for years. Right. And so undoubtedly, you have had, hopefully, quite a bit of gain over the last 12, 13 years. Mm-hmm. And yes, now we're having some losses, and we don't want that. I don't want you to have those losses. But collectively, you're still up much more than you would have been had you just left it in cash. So, there has to be a balance in how we approach this, and we don't want to be overly emotional. Not that emotion can't be involved, because retirement is very much an emotional thing, right? The dollars help us retire. They help us meet our emotional goals of spending time with our family and all these things. But we don't want to be overly emotional and make a snap decision that really could be damaging in the long run.
I want to add something, because this is such a good statement. This article, it says this: before you just blindly sell and stick your cash under the proverbial mattress, evaluate your actual holdings and think about where you can do better.
Right.
How good is that? That's exactly what Casey is just talking about. If you go out of your stocks, where are you going to run to? Right. Well, if possibly bonds, right? But if interest rates rise, that's not so fun to run to bonds, right? So again, is there another place where you can, especially if you're near retirement and you need income, where do I go to create income? That's where a true retirement plan comes into play. And if you don't have that right now, I think you're stressing a lot more than a lot of our clients, because our clients have a true written plan that addresses income. It addresses taxes. We're going to deal with the medical part of things with Medicare and maybe some estate planning. So again, please pick up the phone if you're wondering what to do. And you're just stressed out right now.
Yeah, and I think the other part of this too, and I wish I had the numbers in front of me. I don't at the moment, but some of the best days in the market have come after some of the worst days in the market. So the idea there is that if you have a bad day and you sell and move to cash, then you're sitting on the sidelines when the market does recover, right? And again, if you move to cash, what happens is now you have to figure out when to buy back into the market. So you've really put yourself in this situation where now you have to time the market properly. And that's a scary thing because every investment advisor will tell you don't do that, right? So you want to be very careful about the approach that you do take. If you want to be more conservative, your advisor should be able to help you do that. That's an important piece of their job, but you just don't want to be so emotional that, we really kind of amplify the problem. That's the other thing.
And you guys say it all the time. I mean, working with a fiduciary firm, having a calmness about the activities that you are doing with your portfolio, you have a plan. You can lean into it. If you're solo and you're out there sitting on a portfolio, you're riding the lightning right now and you're scared. Mm-hmm. If you have a plan, if you're working with a fiduciary, you step back and you see the bigger picture. I mean, it is your retirement. It's not a time to panic. It's a time to be aware. It's a time to educate yourself. It's a time to work with fiduciaries and really map this out before you get into any kind of hot water that you can't get out of. Now, the opportunity to talk about your situation, it's ongoing during the course of this show. Casey, I want you to kind of walk us through how these appointments are going to go. They can do phone call. They can do in person. It's about helping here in Seattle. Look, we get it. It's nervous time. It's your money. And you can take charge right now. But what's going to happen for these appointments?
Well, for those that are willing to pick up the phone and give us a call, we'll do exactly like you just said. We'll just have a conversation. That's really what this is about, is it's an opportunity for you to not only get a written financial plan, but really to get a second opinion on what you're doing, right? If you already have an advisor, this is a second opinion. We don't have a cost for you. You can leave your checkbook at home, and there's no obligation. We'll give you our thoughts. We'll do our analysis. Our team goes very in-depth to figure out all the things that are going on, to figure out what path you're on, and then help you determine how you get to the path that you actually want to be on, right? So we'll talk about the risks that you're taking, how your investments will perform in an up market, in a down market, what type of expenses you're paying with those investments, what taxes will do. And really, this is, again, an opportunity for you to have a custom-tailored written financial plan that helps you accomplish your goals. That's really what this is about. And so, maybe I should say what this is not for. This is not you agreeing to become a client. This is not us agreeing to take you as a client, right? And the reason I say that is because I think that's what's on people's minds, is they're worried they're going to be sold something. That's not what we do. So if you want a written financial plan, now's your opportunity. Pick up the phone, give us a call.
All right. The appointments are available by calling 866-668-3625. That's 866-668-3625. You're leaving the checkbook at home. These are complimentary. See if you're on track. You're going to walk out with a written financial plan. 866-668-3625. When we return on Elevate Your Wealth, we've got more of the top articles facing retirees today. We're also going to talk about baseball this season and how it relates to retirement planning. What? That's next. Back on Elevate Your Wealth. Mark Stimpson and Casey Elkins are your hosts. You can find them at Elevated Financial Management right here in Seattle. They're certified financial fiduciaries. They've got 42 years combined experience. It's all about getting you ready for your retirement, Seattle. Check out the website, all letters, EFMNW.com. Again, links to the TV show and our radio show in podcast form. I'm Morgan Patrick. It's my pleasure to go back and forth with the gentlemen on retirement each and every week. And we talk real life here on the program. We're going to get into some other retirement topics, but I mentioned this leaving our last segment, saying that we were going to kind of tie baseball to retirement. So the baseball season, guys, is... it's a long season, 160 plus games in the regular season.
I hear that every year.
And Seattle fans, they tend to, I don't know, if you're really kind of clinging, you're really close to it, you're a little nervous. But just tell us about the ups and downs of the Seattle market.
Unfortunately, there's just not a lot of ups right now. It's mostly downs.
Yeah.
Not to be negative about it. I mean, I like to be a positive person, and we love the Mariners, right? Mark and I are both local guys, and we like to support the local teams. And I'm a Mariners season ticket holder, and So I will always choose I will always choose to be a fan. But gosh, yeah, it's been a challenge lately. It's been difficult. And, I wish that there was a little more volatility, I guess, because it really just kind of seems to be going one way. It's not volatile; it just keeps going down.
Hey, well, we could live in Atlanta right now. Okay, go figure that.
Yeah, it's been rough, but we're holding on. We're hopeful. Yeah. It's like you said. I'm not quite sure what to say to that, Morgan. I'm going through my emotions over here, man. I'm struggling.
We're going to go back to retirement planning.
Well, when you think about baseball and the length of the season, until you're probably officially eliminated when you're near the playoffs,
right,
you got a chance, right?
You do.
Same thing.
Telling me I got a chance?
Well, I'm telling you got a chance. You need to plan better. They need to game plan better in Seattle. And I don't appreciate the shot at the Braves, but they need even more planning. So
Morgan's going to leave the room.
I understand. You guys are going down in flames, and you're throwing out flames at me. I get it. But no, I mean, having a plan. It's not panic time. It may be, how can we help our bullpen time? How can we? I mean, there are a number of things. Maybe we need all torpedo bats. I don't know.
Oh, I think we do. I definitely torpedo bats. We need torpedoes on both ends. We need something here
because we've been torpedoed.
We're getting torpedoed. But to kind of bring that full circle, like you did say, Morgan, and it is a long season, right? It absolutely is, and so it's not that all hope is lost. That's really not the point that we're. At least that's not how I feel, anyways. But it's discouraging, right? It's frustrating, and to be a big supporter of the team, and we're all local folks listening to the show here, so that's a challenge. But to bring that full circle back to the investment world, it's the same thing, right? It's if the market is down, let's say 20% or something. That doesn't mean it's down 20% forever, right? The market has been through downturns before. Now, this is an opportunity for you to consider how you're investing and maybe to lessen how much downside you have. But the market has returned. From the year 2000, the market did return. From the year 2008, the market did return. And it's doing better in the last number of years than it ever had before. So it's kind of the same thing where it's about how much time you have in it. And if you are on the cusp of retirement, which I think most of our listeners are, because that's the type of planning that we do, right? Retirement-specific planning. If you're on the cusp of retirement, that's where things start to change a little bit, right? What is the time horizon for the money that you have invested? If the time horizon is such that you need to start taking money out next year or even in the next 5 years, then what's happening right now is very unsettling, and we absolutely understand why. So again, that's where the plan is important.
Yeah, I was gonna say, if you are in that red zone that we talk about all the time, you're approaching what is going to be your golden years, and you experience kind of what we're experiencing right now. People want to know, what do you do? I mean, what's your first action as opposed to reaction? You don't want to overreact, but a downturn happens, guys. And let's just say we've got listeners that are sitting on portfolios, and we know we do have those listeners. What's the first thing they need to do?
Well, and this is, Casey was just talking about this. This is why we believe that a written plan is so important, because what's so critical is if you begin to draw the money out when it's doing what it's doing right now, that's when it changes everything. We teach this at the college level. We have a cool couple of slides that we go over when we talk about sequence of return risk, right? And so if people are drawing down and the market is tumbling, especially in the first couple of years of retirement, you can be in big trouble over your retirement years of 20, 30, maybe even longer. So again, being prepared ahead of time so that if the market does do this, that you're not drawing money out of the stocks, or what we call the red bucket, the equity bucket, equity and bond bucket. We don't want to be taking money out when those are going down, right? So do we have other vehicles or other buckets that we can draw on? A good example is, I love, you might have a life insurance policy that has some cash value. Maybe you could take some money out of that instead of selling stocks at a loss, right? We don't ever want to do that if at all possible. What about, and I'm going to bring up this word. I'm bringing up the reverse mortgage. And again, we don't do them, but I tell you, that can be a very powerful tool to use in the right situation, because it can allow you to take money out of a plan, a line of credit that you could create off equity in your home that is doing nothing for you as it sits there. Now, if you sell, you're going to reap that benefit, right? But why not use some of that money in a crisis situation that can be happening versus taking losses on your stock portfolio? So there is certain other things that we can do to lessen the risk and lessen the anxiety if we have a true plan. That's why we always talk about this on every show that we do. Do you have a written plan that is going to allow you to be successful when the market is misbehaving like it is right now? And that's the deal. That's it in a nutshell, right? If you have a plan, you're going to survive this.
Right. And, I think that the header for this article, so it's called "If You're Nearing Retirement, Here's What to Do with Your Money Now." But then the kind of summary of it, or the snapshot, I love this quote. This is why it caught my eye. It says, "Market downturns like this often tempt people to make rash decisions." And then here it is, "But it is better to have a plan."
Yeah, that's it.
And that, it could not be summarized better than that. It really could not.
Well, yeah. I was going to say this, guys. We say it all the time: don't panic, don't panic, don't panic. We don't want you to misconstrue that with "don't do anything."
Right.
There's a lot going on. You don't need to panic, but you do need to plan.
Yeah.
That's the other P word.
Yeah, see, and this is what I just want to bring this up. I love a thought here. It said, this may be a great time to consider doing a Roth conversion to set up some tax-free income in the future. So again, there's some very positive things that can be done in a really prudent way, instead of just looking at red. Oh, what am I going to do? Take advantage of the situation. Maybe what about tax loss harvesting? That doesn't get talked about like it should, right? And there's some things that we can do tax-wise that can be truly beneficial if we just maybe put our minds, or go talk to someone that could be helping us with this when they're not getting these kinds of suggestions from their current planner.
So important. Again, just to get information, have the knowledge, have someone that you can lean into when it comes to your retirement with everything that's going on. And how many times have you heard us say, retirement doesn't happen in a vacuum. Retirement is customized. It needs to have a plan that is built for you or the couple that is retiring. Cookie cutter stuff doesn't cut it. You have to have something dialed into your experience. If you're close to retirement, there are some big, nasty things that can happen if you don't have a plan. If you do have a plan, there are ways to navigate these issues.
Yeah.
Again, you can't avoid everything, but you can certainly relieve a lot of the stress, guys.
There's a good quote in this article. It says, "If the market is keeping you up at night, your tolerance for stock market risk may be lower than you had previously assumed." When the market is going up, everybody seems to have a really high appetite for risk, right?
Exactly.
Everybody's real comfortable with taking lots of risk when we feel like the market's going to continue to go up. But when we see things like we've seen recently, suddenly folks realize, maybe I'm not quite as risk. I don't have the appetite for risk that I thought I did. And so, you really want to, again, find someone that can help challenge your thinking a little bit, right? If you're going to an advisor and they're just doing whatever it is that you say and just agreeing with whatever it is that you say or something along those lines, that's really not an advisor. It's an order taker, right? You need an advisor. You need somebody that can bring different ideas to you, somebody that can help you look at it from a different viewpoint and really help you custom tailor what it is that you're trying to do.
In fact, I love this sentence. One way to enhance your odds of sticking to a long-term care plan is to stifle the urge to check your portfolio's value. Taking a quick glance when stocks are down can increase the temptation to sell stocks at a lower price because it brings the emotion into it, right? And again, investing, sometimes the best investors in the world, they'll admit they don't do it based on emotion. They don't let the emotions take over, right? And that's what the average investor and the average retiree does a lot of the time, and that's what we help them try and do, is take that emotion out of it so that they don't make a decision that they're really going to regret later.
Well, guys, let's help some people out. And we get it. Emotions, it's your money. But working with a fiduciary firm and mapping this out will give you some confidence. Mark, walk us through how these appointments are going to go.
Yeah, so please, if you're listening to our show today and you're anxious about what's going on in the market, please pick up the phone, give us a call. All we're going to do is have a conversation. You're going to get to leave your checkbook at home. We haven't decided whether we're a good fit or not, but at least we can have a conversation that might give you some confidence when it comes to what do I do from a tax standpoint? What about, is my income going to be guaranteed for the next however long my retirement lasts? What about medical decisions you have to make when it comes to Medicare and possibly Medicaid planning? We're doing some of that right now. So again, please pick up the phone, give us a call. Let our team put together a plan that's going to make your retirement successful, which is what all of us truly want.
Have that plan. Here's the number to call, 866-668-3625. Again, these are complimentary appointments. You're going to walk out with a written financial plan. Call now, 866-668-3625. When we return on Elevate Your Wealth, it's time for retirement scenarios. I'll throw them at the guys. We'll see what they come up with. It's all next. Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management, 42 plus years combined experience in the planning business, getting you ready for retirement. Seattle, they're certified financial fiduciaries. I'm Morgan Patrick. My pleasure to talk retirement with the guys each and every week. We give you an opportunity to get on their calendar, and these appointments are no cost. They're no obligation, which means you're not agreeing to become a client. This is a great way to test drive Elevated Financial Management and see how you're doing with your retirement planning. And if you're sitting on a portfolio, that is not a plan. If you're in the middle of something, you're frustrated, calls aren't being returned, maybe your appointments get moved around, might be time for that second opinion. We'll give you an opportunity to get on the calendar with Elevated Financial Management here shortly. All right, so we normally get into scenarios, but I think we've got some client stories. So let's put on our storytelling hat. Casey, you take it away. Who are we talking about right now?
Well, I won't give their name.
Well, fictitiously.
Oh, of course,
Yes.
of course. I think that this is really a good one because I think a number of folks are in this situation right now. So we had a couple come in, and they drove pretty far to come see us. And they listened to the radio show. They actually came to a workshop. Or no, they saw us on TV. Yeah, they saw us on TV. They came to a workshop that we taught
At the car museum.
at the LeMay Car Museum. And they set an appointment to come talk with us. And we had our first conversation. We did an analysis for them, just like we do for everybody. Put together our analysis, kind of showed them where we think maybe there's some room for improvement, talked about how they might want to make changes. And all of this is happening while the market is in turmoil, right? So they're considering making some adjustments, but the market is in turmoil. So then what happened was, we had a couple of really bad days in the market recently. And on that first bad day, we got an email from this gentleman. Well, the husband and wife were determining if they wanted to make some changes or not. And the husband kind of says, well, what should we do, right? Do we make the change now or do we wait, right? I don't want to sell at a loss, right? I don't want to sell at a loss. So maybe we wait and hopefully the market returns and then maybe we'll make some changes to things. But, they're just kind of stuck in this weird spot. And Mark and I can kind of see this. You can see the gears turning. You can see kind of the struggle that they're in trying to make this decision. And so our response to them was, it would be better to sell when the market is down than when the market is way down, because we don't know what's going to happen. Now, in hindsight, we can see that the market had continued to fall. And there's been good days, there's been bad days, right? It's not all or nothing. But the idea is that you don't want to let that volatility stop you or paralyze you, right? It's that analysis paralysis that we've talked about before. And so, the market may return. And so you'll look at it and go, gosh, I wish I hadn't sold at that point. But what if the market continues to fall? Then you're going to look at it and go, I wish that I had sold, right?
Yeah.
There is no perfect answer to any of this. The key is that if you are working towards making a change, it's about the end goal of why you were making that change in the first place, right? Because you don't plan in a vacuum. Your investments don't live in a vacuum. So the real world happens, and we are experiencing that right now more than in years past. And so the circumstance with that is that there's a recency bias where people feel that, well, we've had some bad days, but the market's going to continue to go up because it's been going up for a long time. And that's not necessarily the case. What if we have a 2000 or a 2008? The market was down for multiple years at the beginning of the 2000s, right? We had sustained losses. And so what if that's the circumstance? Now you're going to be wishing, well, gosh, I wish that I had sold, right? So you really want to, again, make your decisions not just based on the losses and gains that you've had recently, but about where you're trying to go. If you are trying to put a plan into place to accomplish a certain goal, don't let current volatility keep you from reaching that goal or from making those changes.
Yeah, in fact, I just want to add, because it brought up a case that I'm actually working on right now, the exact same scenario. She did not want to sell her account and was wanting to time it. Well,
right.
After talking with the daughter convinced Mom. Again, we go back to the purpose. You
Right,
mentioned
exactly.
it. What is the purpose for the money? And she was trying to, get back a couple $1,000s, right? But in the long run, the purpose, because she's got a husband right now that has dementia, and he's in an assisted living facility. So she's got to extend these funds as long as possible because she wants to be able to be a private pay for as long as possible before she ends up having to rely on Medicaid, which
Right.
she doesn't want to do that. But the point is, you can't. I told her, we're not going to try and tell you when to time the market. We can't. Nobody can. And anybody that tries to tell you, you better run the other way because it's just not truth. Nobody can do it. Otherwise, we'd all be retired and we'd have all the money we could ever imagine having, right? But it just doesn't work that way. So again, if you've got a situation where you're dealing with maybe loved ones that are having to look at long-term care, where's the money going to come from for that? What about where's the guaranteed income going to come from my retirement portfolio to make my ends meet each and every month? Again, this is what we are so committed to with our clients, is to putting together a plan where you can weather these type of storms and not have your retirement income be tossed on its head and wondering, oh no, how am I going to recover? Because we could tell some stories in that regard with some of our Boeing clients that lost a fortune because they had everything in Boeing stock. And
Right.
then the door blows off the plane, and look what happened to his retirement. So again, if you have a plan, let's not let the negativity of the market and all the red blow us off, our center and lead to something that we're going to really regret in the long run.
Right. And I think, I'm glad you shared that story, Mark, right? Because it's you kind of have both sides, right? We have one client or one individual, not a client, just somebody that we've spoken with, but one individual who decided to hold on and hope that they were going to have a return. And then another individual who decided to sell. And they initially took a loss because of that, but it was a smaller loss, and that worked out in their favor because the market had continued to fall. And so, like I said, there's no perfect scenario where you get to have your cake and eat it too. That's just not the circumstance. So it's really about the purpose. What is it that you're trying to accomplish? And you know what? There may be a need to sell at a relatively small loss, right? She was down just a couple percent at that point. Yeah. But that protected her from being down even further. And
Right.
really, it still allows her to accomplish her goal.
Yeah.
And so that's really what it is. And I think all too often people get caught up in this idea of, well, my account was worth $500,000. Now it's worth $495. I don't want to sell it when it's down. Yeah, but the investments that you put in were only $300,000, so
Yeah, I
you're
know.
still up $195,000, right? So,
Right.
just as a hypothetical, but the idea is that it's people are so quick to forget the gains that they've
Right.
had
Yep.
because the pain from the loss is so intense and it's so fresh and it's new, right? Because we haven't experienced losses like this in quite a while. And so that being the circumstance, again, it comes back to having a plan, having a conversation, and figuring out what works best for you. Not everything is going to be optimized. The reality is you'll never buy at the bottom and you'll never sell at the top. I was talking with a good friend of mine this morning. We were both driving, had some time to talk. And, the idea is always, buy low, sell high. Well, gosh, how about this? Go to work, make $1 million a day and retire at 25. It's really easy to say it. It's not easy to do, right? So if you could just buy low and sell high, well, we'd all be retired at 30 and it'd be fine, right? But that's not the circumstance. So the idea is that you have to find something that actually allows you to be successful, not just these fun little catchphrases that make it seem like investing is the easiest thing in the world, because it just isn't, right? It's not. And so you want to make sure that you can be successful despite what's happening. And that's where a plan comes in.
Yeah, it's all about perspective. You guys say it all the time. I mean, you can't look at just a microcosm of what's going on when you need to look at the big picture and make sure you're planning for that. Again, client stories and opportunity, almost like scenarios, to talk about different situations when it comes to retirement. And again, it's kind of a squirrely, crazy time right now. Very important to be in touch with your money, be in touch with your plan. And you're probably going, well, you know what? I've got a portfolio, but I don't have a plan. Well, we're going to give you an opportunity to get on the calendar with Elevated Financial Management. And you can have these down-to-earth conversations about your bigger picture, right? Not the microcosm, but the bigger picture. How are you going to handle your overall retirement if indeed something happens?
Yeah, exactly. That's it, right? And I think we've seen so much volatility in the market. I mean, there was a day recently where the market was down multiple percent and then it finished up. And I mean, it's ultra volatile right now, more than most have seen or remember anyways, right? And so here's the question. If we see, and this is where you can kind of reflect on your own thinking and your own emotions a little bit. We've seen that the market has been on its way down. But we've also seen days where it's had good days, where it's had a green day, it's had a positive 1% or 2% or something along those lines. Do you look at that and do you go, okay, well, now things are starting to turn around, right? The market, it's going back up, it's going back up. If that's your initial thought, I'm glad that you're a positive person, but that really may not be the truth, right? It may be a small bounce on the way down. And if you look at any trend in the market, any chart, you'll see that even on the way down, there are positive days and there are positive weeks, but that doesn't mean it doesn't keep falling. But the opposite of that is also true, right? That's the key. Is so maybe we are having some positive days. Does it mean that it's going to continue to fall? We don't know. Nobody knows, right? So you got to find a way to be successful. And so really what this boils down to is this is an opportunity for you to pick up the phone, give us a call, and we will have a conversation specifically tailored to you. The investing that you'd like to do, what your goals are, what the purpose is for the money that you've worked so hard to save, what you want to do in retirement. We'll talk about your current investments, the volatility behind them. We'll talk about the fees that you're paying, even some hidden fees, expense ratios, things like that. We'll talk about long-term care, health care, Social Security, all those questions that are swirling around in your mind as it comes to retirement. So if you've got those questions, if you want to take advantage, get a written financial plan put together just for you, now's your opportunity. Pick up the phone, give us a call.
Here's the phone number, 866-668-3625. Again, 866-668-3625. You're going to walk out with a written financial plan. We say this all the time. You're not agreeing to become a client. This is a great way to test drive Elevated Financial Management. See how you're doing with your planning. If you're just sitting on a portfolio, great way to get rolling on a plan. If you're in the middle of something, need a second opinion, grab one right now. 866-668-3625. 866-668-3625. Another edition of Elevate Your Wealth is in the books. Go Mariners. For Mark and Casey, I'm Morgan. See you on the radio next week.
And
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.